We're going to talk about everything stablecoins right now, probably the only thing that's working right now in the crypto ecosystem and growing. My name is Henry Arslan. I'm the founder of 9 Blocks Capital, or the first VAR-regulated crypto hedge fund. Also founder of ACX Compliance, the world's biggest crypto compliance services firm. And I think where many people know me from, I host a show, Crypto Weekly, on CNBC Arabia, watched by 60 million people each week, and my social media, with the Future of Money podcast and all my shows on my LinkedIn channel. Today we're going to talk about everything stablecoin related, and I promise you it's going to be insightful, interesting, and hopefully exciting as well with all the developments going on. And this because we have a dream team panel today with us to cover a lot of different topics. I'm going to start on my right, Rich Harrison. He manages, he's at MoonPay, but he manages everything related to payments and banking. But one thing you may not know about Rich, by the way, he's a massive Disney fan. Here we go, if you want to have your favorite Disney movie conversation, he's the man.
Yep.
A British man into Disney movie, I love it.
Yep.
Next, Jack McDonald from Ripple. He leads all of Ripple's stablecoin business. He's doing all their partnerships as well. One thing about Jack you may not know, by the way, he sailed halfway around the world for a trip that took over a year on his 40-foot boat, so from Florida to all the way to New Zealand. So, hey.
Still married with my wife.
And still married,
30 years later.
At the time, by the way, there was no Wi-Fi, nothing on the boat, so you better chit-chat at night
right.
when the waves are hitting. And of course, last but not least, is Brent Perot from Paxos. He's a senior staff software engineer, where he's really focused on-chain reward distribution, DeFi for brokerages, and all the engineering challenges around. So lots to discuss today. Rich, I'm going to kick off with you actually to kick off, because frankly, I've been speaking at every consensus since we started. This is the one with the most TradFi participation. You spent many years within the TradFi ecosystem. Now we're seeing from players like Western Union, MoneyGram, to all the TradFi firms coming in. Are you surprised they're coming in so quickly now? And what do you think is the catalyst? Is it Genius Act, FOMO, shareholder pressure? What do you think is it?
It's a good question. I think it's probably all of the above, if I'm being honest. I think what Genius brought us was like clarity, right, around how to operate in this space. And I think Genius was like a permission slip, right, for companies to enter into sort of stable coins. I think it was like natural evolution of payments as well. So I've been in payments for like, 16 odd years. I've worked across the likes of PayPal's, card acquiring, alternative payments. And there's a couple of things that I sort of hold dear to like payments, which is speed and convenience, right?
Okay.
Speed is in you want to pay when you want to pay. You want the money to move like super quickly. You want to pay like with whatever method or mechanism you want to pay with. And to be quite blunt, like the payment ecosystem, if you think about it, is a bit broken, right? It takes 3 to 5 days for funds to go from one country to another country. If you want to remit money using like a Western Union or something, you're probably losing 10%, right, of your funds.
Yep.
So stablecoin fits that evolution of payments. It's quick, it's immediate, it's one-to-one. People can remit money, both businesses is where the major use case is right now today, consumers. So I think like it was all of the above, but I think like evolution of payments is probably the main thing.
So 5 years in, you think it'll be all about stablecoins, but completely mainstream from a payments perspective?
I mean, it's a tough one, right? Because if you look at like global remittance of fiat, right,
Yep.
today, stablecoin probably amasses about 2%, right, of that.
Yep.
In 5 years, we're probably looking at maybe 10% of that. I think the use case for B2B is done, right? We know that what the benefits are, right? Cross-border remittance and everything is there. I think the major challenge is going to be on the consumer, like the retail side. And we can get into challenges in a bit, but once we break that, it's going to skyrocket.
So all the challenges in the user, Jack, I'll move it to you. So there's obviously a range of stable coins we're seeing in the market, right? There's the regulated firms like yours and the unregulated ones, from Tether and others that we're seeing in the market, but also the banks with tokenized deposits.
Yeah.
So on the consumer side, what Rich was saying, where do you think we'll see the most traction? Regulated, unregulated, tokenized deposits, or others?
I think it depends on what your use case and what your target audience is. And so at Ripple, we focus on institutional customers, and for the institutions to really unlock the full demand and to realize the TAM that's out there, you have to be regulated, and you have to be regulated at the highest level. Right now, we're regulated by New York. We'll soon have our OCC charter. We've got licenses elsewhere in the world. And so I think part of your earlier question as well around what is the unlock for institutions, it's going to be a combination of regulatory support and oversight, as well as the other aspects of an issuance. So it could be the partners you choose, who your bank, in our case, BNY is our custodian, Deloitte, et cetera, the brand of the company. Those are the sort of features that give comfort to institutions, who ultimately want to lean into this space. They see the future, which you were mentioning, Rich, and see the opportunity, but they want to be, they want their concerns assuaged that this is a reasonable next step to take, and that I can be comfortable moving real money in real volumes to that on-chain world.
So you think that was the real catalyst, the fact that there's regulations, the big firms are into it? Because I would argue on the other side, on the retail side, Tether grown for many, many years with zero oversight. I mean, yeah, they can do proof of reserves, but it was users want liquidity and activity, right?
Yeah, well, I think Tether solved a very real problem for primarily retail customers in emerging markets, and they've killed it, and they've done a phenomenal job, and that use case is real for any number of different reasons. I think the institutional use case is a fundamentally different use case, and I think that this confluence of both issuers doing it the right way, but then the Genius Act was the real catalyst.
Yeah.
I think that really was, as you referenced the permission slip, but a real piece of legislation that will, I think, forever make the use of stablecoins permissible activity. The next question is how they comport with bank money, tokenized deposits, central bank money. We'll talk about that in a little bit, I'm sure.
Okay, so because always it's broken is obviously what's interesting to institutional investors, but maybe Brent, I'll move it to you. Like, I know we have Tether, it is what it is, right? I mean, they're the dominant player in the market. And then what do you think is the edge of all of these new stable coins coming in the market? A PUSD, for example, a lot of the big global ones have their now US Genius Act compliant one, or they're working on it. What will make a user or a regulated firm use something like PUSD or the Ripple or others as a stable coin instead of going to the one offshore where there's the actual liquidity?
Yeah, so Tether and Circle's USDC certainly have a first mover advantage. They have market share, which I would love for Paxos stablecoins to have. But I think I look at two things for what I think the edge is for Paxos stablecoins, which are newer entrants. PYUSD being the largest OCC regulated stablecoin has grown 4x since this time last year. Going back to what Jack said, I think the regulated structure is what sets them apart. That trust is a huge part that Circle and Tether certainly haven't totally prioritized. And I think when I look at where we are in the adoption curve, we look at how many assets there are out in the world that we think might be using blockchain in the future, and we might not even be at 1% blockchain adoption at this point. So what I'm excited about is, I think we then ask the question, where those funds, where are they going to come from, and who are they going to choose for a stablecoin to use? I think it's going to come from sophisticated institutions that have large amounts of funds. Charles Schwab just announced with Schwab Crypto a couple weeks ago to use Paxos Rails as well. And I think those large institutions, those sophisticated institutions, they're going to select a trusted issuer and a stable coin that has a model that fits the trust and
so you think for users, just before that, do you think users will prefer the regulated stablecoin, or they will go prioritize to liquidity? Or it depends on, I guess, the end user?
Yeah, that's a great question. I think users, are going to be interested in liquidity. I think that, but most users, they're going to be operating through the convenient interfaces that they're used to. And a lot of those are existing financial products right now. Some of the blockchain native companies are growing bases, but I also think that users are going to be looking for those incentives and reward models. So I think that's one of the other edges that I think some stablecoins can have, is what is the distribution doing for the end user in terms of incentive and kickback.
Especially for institutions as well, for a lot of the hedge funds coming in and the big liquidity providers. Yeah.
Certainly, and those institutions expect to be able to get the risk-free rate, and that expectation is just going to become more cemented, and that's why we see people trying to talk about issuing their own token, right? They're just thinking about, we want to be getting that risk-free rate. And so that's going to become commoditized, and one of the key things that I think new entrants are offering.
Jack, go ahead.
I was just going to add also, I think the common default way of thinking about stablecoins is market cap, and you look at that, and clearly, Tether and Circle, first movers. One of the things that we're quite focused on is long-term utility and what that stablecoin is being used for. And we were awarded the second place in a Decrypt study at the end of last year, which measures the number of times a stablecoin gets transferred or used after it gets minted.
Okay.
And it was a pretty interesting stat, and we've been following that in different ways since then around if you bundle together the amount of mint burn on a daily basis together with the volume, trading volume at a centralized or decentralized exchange, what's happening in DeFi, there's a significant amount of volume that we're seeing in our stablecoin that's well ahead of where we're already at $1.6 billion of market cap and growing, but the utility and that volume behind it is growing at a much greater clip. And that's important to us because it shows us the underlying utility, which is what we're really building for, which is the sticky, sustainable growth driver into the future.
And on that point as well, Jack, like the users who are using that utility, what is the main use case they're using Ripple?
Yeah, well, it could be, specifically for us, the big buckets that we're focused on, which is really part of our origin story, is around payments. Obviously, Ripple started 2012 as a cross-border payments, largely remittances with the recent acquisition of G Treasury, now Ripple Treasury. We're serving corporates, 1,100 corporates who literally moved, I think, $300 trillion worth of value last year, none of it on chain. And so that's just a fertile ground for us to abstract away a lot of the day-to-day, but start untrapping capital at nights, weekends for them, and moving money on chain. The other big pocket is the capital markets use cases, the Hidden Road, now Ripple Prime acquisition, major unlock to use our stablecoin as collateral with exchanges, posting it as a cross-asset class margin tool. So those are utility areas of focus for us that bleed out well beyond the Ripple ecosystem.
Rich, I'm going to talk about challenges in a second, but on that point, Jack, though, a couple of years ago, obviously, this utility to move money, XRP was that utility.
Yeah.
I'm sure there's all the XRP army guys in the room, and that was really the use case. To be fair, not only XRP, Standard, everybody else, right? Yeah. Don't you think this competes with XRP as a layer?
Quite the opposite. It actually complements it because in the same way that Ethereum uses ETH as its gas token or Bitcoin to BTC, every single transaction that's done on the XRP ledger uses XRP as that native token. And so there are still many customers in our payments business that prefer to use XRP as a bridge asset. Some prefer a stablecoin. We were a top 5 minter of USDC, which was part of the catalyst of our getting into the stablecoin business. Now being in the stablecoin business, every mint or every active use of our USD on the ledger uses XRP, and as well as on the ledger itself, XRP being posted as collateral or other use cases is driving it. So we've actually driven more utility for XRP than existed before our stablecoin.
Interesting. I just want to talk about the challenges, right? So Jack was talking about institutional usage and the utility. You spent so many years in the TradFi, let's say fiat rail, even you guys do a lot of that as well. When you're talking to these firms about using stablecoins for moving money around and all those nice things we talk about, what is the single biggest challenge you're seeing? Is it compliance? Is it it's regulated? Is it education? Is it the bad media coverage? We have a stablecoin. Is that some of the conflicts of interest? What is the one that's the biggest challenge you're seeing?
I mean, there isn't one biggest challenge, right? But I think what is important to recognize right now is the lack of challenge, right? So if you think about 2 years ago, you talk to any financial institution, right? 80% of them will come back and say compliance, right, was the biggest challenge. Right? Now it's 20%, something like that. So I think we've gone a hell of a long way, right, in the last 2 years with that. I think there are still fundamental challenges when it comes to things like banking appetite, right? There are banks out there that still are a bit, a bit away from crypto, when it comes to boarding crypto companies. So I think we still have to sort of get over that hurdle, of the appetite towards crypto businesses. I think there's a real life challenge in terms of how do CFOs actually audit this stable coin on their balance sheets? Right? I think a lot of people don't really understand how to equate, right, the stable coin, because fiat is easy, right? It's columns and you put the numbers in. Stablecoin is not so much. And when you start factoring in yield and things like that, then again, how do they quantify that in their reports and so on? I think my own personal opinion is and I'll be interested to see what people in the room have done. So show of hands, who's used stablecoin to actually pay for something. in the last like,
Quite a bit.
yeah, a few. So I think like the biggest thing is like infrastructure, right?
Yeah.
And what I mean by that is the easiest way to liken it is like the electric car movement,
Yeah.
right? The electric car on its own, phenomenal piece of kit, right? Works, battery powered, etc. The challenge was the infrastructure, right? The charging of it,
Yeah.
right? So I think we've got the same thing with stablecoins, right? The actual product itself solves so many problems, right? Cross-border, etc., one-to-one ratio, and so on. It's like, how do you use stablecoin to pay your rent?
Yeah.
Right? How do you use it to buy a cup of coffee? Right? And yeah, we are seeing crypto-backed, stablecoin-backed cards now. It's like up to $1.5 billion a month, like last year. Like
growing as well.
And it's super growing,
Yeah.
right? So we're sort of connecting that bit. So once we get over that infrastructure challenge, then I think that's probably like, in my eyes, like the biggest challenge so far is like taking stablecoins and using it in every real day scenario where you would use a fiat card or a debit card or something.
Infrastructure. Right now, I'll move it to you. I want to ask you about RWA in a second, but what about privacy? Like I see as a user, my biggest concern in stablecoin is if I pay my coffee here, you know, you're showing, actually there's a lack of privacy in stablecoins, ironically, despite what we were seeing a lot. Don't you think that's a problem from a engineering perspective, or you think that's going to be settled as well?
Well, I do think it's going to be settled.
Yeah.
I do think it's a problem. Privacy, there's definite use cases that we see where people want, if they're paying out interests on loans, or there's a number of use cases where firms don't want people to be able to look on chain and see, you know, what is the price of that asset,
Yep.
or what is the amount that's even just moving. So there's even use cases where just making the amount private is
Yep.
enough. But I think there's also challenges like Rich was talking about for stablecoins in the first place of infrastructure, because if you can't go end-to-end private on your whole path and have a whole ecosystem where everything's private, then there's a lot of information leakage on wherever you're moving from private to public and back. Then you're leaking those amounts, and I think, you know, maybe 8 years ago we thought there was like pseudo-anonymity on the blockchain, but that pseudo-anonymity was actually never good if you just do analytics, and same thing is true with if you have public amounts in some places and private in others, you
Correct.
still have too much information, and so you have to have a full private ecosystem that functions before most use cases can take advantage.
Does that come up, Jack?
Yeah, it does.
The privacy come up?
Well, I was going to say, it comes up a lot in institutions. I know specifically in the XRP ledger that there's some developments coming soon on the privacy feature, and I think those are more germane to the institutional use cases who are really going to demand privacy features. And my understanding is it's essentially an election that you can make, you know, for a particular type of transaction or use case that would be private. Whether or not that bleeds out to the mass you know, users when you really explode this out. I think it's an interesting aspect, and I think it is something that's going to have to be solved for. Part of it is your whole identity component to it. You throw AI on top of that and what that's going to mean on a mass scale. So it's one of those areas I think where you're going to see a lot more development going forward.
Be interesting, actually, on that perspective. What's your view? Do you guys see RWA token? Think about BIDL, talk about Athena as a competitor. Like, you know, we're talking about the whole yield element, incentives. You know, because the way I look at it, at one point, yeah, you can give incentives. It's like burning VC money, all the crypto VC funded firms we see. You know, you're burning sovereign wealth fund money just to create user adoption in a way. But when that incentives start going down, and there's a lot of tokens that have this yield are giving in, like, you know, and now we can use them as collateral on the crypto exchanges as well when you're trading and other use cases. Like, how do you guys see that?
I think it's very complementary. I mean, we did a deal with Securitize to support 24/7 liquidity for BIDL, for VanEx, VBill, and others. And so there's again, the use cases complement one another. I think about whether it's a deposit token or something like a BIDL can be a savings account, where a stablecoin becomes a checking account where you actually want to do something with it, right? And so if you want to move into a yield-bearing instrument that's money at rest, essentially, that's what those products are for, and then you want to move the money, and a stablecoin's are perfect. Whether or not they merge, you know, 5 years, 10 years from now and look, you know, as one, time will tell. But I think for the time being right now, you need that off-ramp, you need that on-ramp, which, you know, we're working with MoonPay on and off-ramps to really help get money in and out of these type of instruments.
What's your view, Brent? I mean, do you see these RWA tokens as a competitor or the yield-bearing assets?
No, I think there's room for a lot of different products on chain. I think they're separate products off-chain, and that can continue on-chain. I agree with Jack that both will exist. I think what's interesting about real-world assets in general is, you don't just necessarily tokenize it just like a stable coin and that's it. There's something underlying and interesting about every different real-world asset. Like with gold, Paxos issues Pax Gold, and under that is real gold at a London vault, right? You've got like gold bars with serial numbers, and we even like tie out for the end user what serial number their balance is tied to.
Yep.
And I think for every different real world asset, there's different things that are interesting about it, and that's what's interesting to put on chain. So I think there's just room for all of that to live on chain alongside stablecoins. With BUIDL, I mean, certainly getting yield that way starts to converge a little bit on what's happening with rewards happening on stablecoins, but I still think stablecoins with really instant redeemability and like public usability is where it's going to be at for payments.
Talking about yield and rewards, obviously the big thing now, we have what's happening with the Clarity Act. For those listening to this afterwards online, we're recording this on May 7th, so God knows what happens in the next couple of days, but there's a big, obviously, lobby fighting now, literally in DC, between the bank lobby and the crypto firms, and you guys, let's see how it's going to turn out. I'll start with you, Jack. We're working with institutions. Like, who do you think is going to win? And I mean, now as we record this, there's some drafts where there's a bit of compromise. As if it looks like a bank savings, the crypto firms are not allowed to offer it. If it's like more payment rewards, like credit cards, it's going to be okay. What's your perception on that?
Well, I hope the customer wins. I think that's what the government should be striving for, and it's certainly our position. And we work with the other providers in the space. I think you start from the premise specifically around this yield issue, which Genius has done. We're in the rulemaking, and so the details are being ironed out, and we're going to know a lot more in the next couple of months there. Clarity Act, obviously more of the market structure. When you look at the Clarity Act, other than the ethics bucket of concerns, it really comes down to this yield, and that's where the tug of war has been. We were close a couple of months ago and got kind of sideswiped there, and so we're back at the table, and it feels like in the last couple of days we've gotten closer. I start with the premise, banks would rather not have stable coins out there. They view it as a threat to their deposit business.
Yeah, of course.
I don't know about you, I don't get a whole lot from my bank on the yield.
Well, unless you're Jamie Dimon, who came out last month and said crypto's a future.
Yeah, well,
we'd
love his support. But the point is that I think they'd rather not have stable coins at all. And the thesis that's out there is that obviously if there's a yield opportunity or some incentive to own a stable coin, that people are going to move their deposits into stable coins. The reality is, and history has shown, National Crypto Association just did a study, people don't leave their banks. It's very tough. You're embedded, it's habit forming, et cetera. But there are utility reasons to want to use a stable coin. And deposit tokens have their purpose. It's a walled garden sort of use case, but stable coins are complementary to that in the same way that central banks have their money. So I view three different types of money. This yield issue, I think it's going to be narrowed down. There's going to be permissible use cases where you can pay an incentive. I view it as a stablecoin issuer, we should be able to pay for distribution, the same way that a cookie manufacturer pays the grocery store to put it on the shelf. We need to pay folks to get it out there into the wild. What our partners choose to do from their own client acquisition, that's your business as a MoonPay, for example, or an exchange. And it feels like we're getting close. We've obviously got a lot of administration support.
Let's see.
The last thing I would say is if the banks want to get into it, get into it. The Genius Act provides them certain advantages. Yes, we've moved your cheese, but deal with it and get into the market if you like it.
When the banks get into it, do you think we'll have a multitude of deposit tokens or stable coins, or there will be 2-3 clear winners? Or there be consortiums?
Well, I think there's a consortium going on they're trying to put together in Europe. Consortiums, generally speaking, are difficult to pull off, but there will be some attempts. I think many banks will have their own stablecoin that work in their walled garden. I don't think Citi necessarily wants State Street and Morgan Stanley, et cetera, et cetera. So I think the opportunity, which we're focused on, is to be this interoperable stablecoin that speaks and is a bridge between those different ecosystems.
I want to talk about USD stablecoin, but one thing on interoperability, Jack mentioned, DeFi. You think we'll have regulated stablecoins and DeFi integration from even an engineering perspective? How do you see that evolving?
Yeah, it's a great question. The challenge, I think, is liquidity, getting so we're getting a lot of
Start walk off.
back
on
noise
it.
Boys and
there.
Rocky and they go together. There you go.
They're excited for my answer, I guess.
Yeah.
I think that getting DeFi into the regulated space is something I'm thinking a lot about. That I'd love to have when people are holding Ethereum and Bitcoin to be able to earn yield on that as well. And I think access to DeFi from the walled garden, from the regulated space, is something that I actually think might drive regulated stablecoins back into DeFi.
Interesting, interesting. Rich, before I go in a minute, what's your, you guys are dealing with the end users, as Jack was mentioning. Are you guys seeing the demand for local currency stablecoins? I mean, committee would argue actually this Genius Act, it makes the US dollar horse run longer, you know, for as long as it may go. Are you guys seeing more demand for other currencies?
I mean, it's a tricky one, right? Because if you look at Tether and Circle, right, they have what 95% of the market, right, in US dollars. So, yeah, I think with Mika coming through in Europe, yes, like I think Euro stablecoins are going to come out. I think if you look at what's happening in the sort of the Southeast market, Asia market, 80% increase on stablecoin year on year or something going down that channel. Like, could we see a HKDC? I don't know. Could we see a SGDT? I don't know. I think, like, if I'm being honest, US dollar as a currency, right, brings stability to like really unstable markets, right? And I think that's what everybody wants to be able to trade in US dollar, right? If you're in LATAM or Asia, Africa, whatever. I think, like, if I'm being honest, like what we probably need to focus on is like the issuer, right? Because if you actually look at somebody like a Meta, right, or Apple Pay or Google, and they launch their own stables, like with their consumer coverage, it would totally disrupt like Circle and Tether, right? So suddenly it could be a USD, whatever, Google, whatever, Meta. So I think it's not necessarily about the currency peg, it's like about the issuer itself. So I think like in the next like year or two, depending on like you were saying about demand and like who's going to be issuing like stable coins, that's going to change.
Well, they tried it with Libra and we saw, I mean, I would argue that all the Libra DM initiative gave rise to the rise we're seeing now.
It was an idea ahead of its time. It was a great
rattled
idea.
the cage big time. Guys, we literally have 2 minutes left. My best friend, the Bell, is here with me. I'm going to ask you quick questions. I want 1 or 2 word answers, and the Bell is here to keep us honest. You guys are ready?
Ready.
Starting with you, Rich. What is the one thing that is exciting you the most right now in the crypto ecosystem?
Crypto-backed cards.
Crypto-backed?
Cards.
Cards.
Capital markets.
Capital markets.
DeFi.
DeFi, of course. What is the one risk, I'm starting from you, Brent. What is the one risk you think that as a crypto industry we are the most underestimating? The biggest risk we're not paying attention to?
Security.
Security, but we saw recently, huh?
Education.
Education, very good point.
That's a KYC.
KYC, hey, music to my ears. What is the one piece of advice you give to anybody who's working at a bank and looking at crypto right now?
Keep your eye on MoonPay.
Use MoonPay.
Go for it.
Go forward.
Yeah, start now.
I'm starting from you. If you could go back to university today or go back to school, what is the one course you would take knowing what you know about the future of finance?
Oof. Economics.
There we go. There we go.
International affairs.
Yeah.
International affairs. There you go.
I mean, when I was at university, there wasn't a crypto thing, but like, something to do with crypto.
By the way, I forgot to, Brent is a cappella singer, by the way. When he's not busy with Paxos, how do you name some singing thing? Okay, this is an interesting one. You have the chance to launch a new crypto business in the stablecoin ecosystem. You have the choice of any founder or CEO in the market right now. Who's your co-founder?
Ivan, obviously.
Ivan, here you go. We'll pay.
Oh, wow. Chris Larson.
Look at it, all throwing the company line. Don't tell me Chad.
I'll go Derek Godfrey to Paxos.
There we go. Last question, guys, to finish.
You know
with
who
this
signs
panel.
our paychecks? Come on.
There we go.
Yeah.
To finish the panel on the stablecoins at Miami 2026, my traditional question, whoever comes on stage with me, you have the chance to have dinner or lunch with one person dead or alive. Lunch or dinner, one person dead or alive. Who do you go with?
Lunch or dinner? Now I'll say Chad.
Chad.
Mick Jagger.
Mick Jagger, here we go. I thought you were going to name me a sailor, but here we go. And, you know, to finish it off the panel,
Well, I'm British, so Winston Churchill.
Winston
obviously.
Churchill, and we have a nice cigar and whiskey with him.
Yeah.
Guys, thank you very much, and thank you for being with us today. Thank you.
Thank you.